if you're working almost any other job, you don't usually lose money when you go to work. Typically, you make money. You go to work, you do your 9 to 5, you walk away at the end of the day, and you've got a profit. Well, that's not true with day trading, and it's also not true with being self-employed, no matter what type of job you may have. If you're, running a fishing boat, maybe, you have an oil leak and you've got to replace part of the engine, and that's going to cost you $5,000. So I think these are some of the struggles that come with being self-employed, and a lot of the people that are interested in learning how to be, full-time day traders and self-sufficient are the type of people that are entrepreneurs and that have their own businesses or have wanted to in the past. So some of these emotions may not be completely unfamiliar. But for me, when I started trading, it was something that I wasn't expecting. And in reality, one of the biggest obstacles to trading success for most traders, and I say this having worked with thousands of students, are the emotions. It can be extremely difficult to handle loss, right? Think of a home builder, right? You do construction, but every 3 weeks, someone comes along and knocks down half of the house that you just built, and you've got to rebuild it. Sure, you're making progress, but every couple of weeks, someone comes along and knocks down part of your work. How frustrating would that be? Well, as day traders, that's something that we actually deal with on pretty much a weekly basis. You take 3 steps forward and 1 big step back. So over the course of the week, hopefully you made a net profit of 2 steps forward. It's not always going to be the case. You have to get used to getting knocked down and rebuilding. Having that ability, having that mentality to get back up on the horse after a big red day. And my worst losing day ever was over $30,000, right? But if I hadn't gotten back on the horse and fought through those emotions, I wouldn't be here today. I've had to fight through all of this same stuff. And so for a lot of beginner traders, these types of frustrations and setbacks can be enough to knock you out of the game, because you can fall into that dangerous cycle of revenge trading, which is when you, in response to a big loss, start trading more and more aggressively to try to recover, to try to compensate, to get out of the hole. 9 times out of 10, it makes the hole twice as deep. And some traders, they really get broken down emotionally after having a few big losses, trying to bounce back, getting bigger losses. And in reality, you can blow up your account in a matter of 10 minutes making bad decisions, which is a scary thing. You always have to be in control. You can't allow your emotions to guide your trading behavior. So if you find yourself trading from a place of anger or frustration, it's a really good idea to shut down the platform and walk away, right? To throw in the towel for the day. I learned that the hard way. As a beginner trader, I would get frustrated, I would get angry, and I would continue to trade. And of course, when you're already agitated and you keep trading, the next loss that happens is just going to make you even more agitated. I sometimes talk about, race car driving. When you're driving a race car and you make a mistake and you crash the car, you're done, right? You're out of the race. You've got to go fix your car, and you'll come back, next Friday night for the next race. But with trading, when you make a mistake, well, you can take another trade immediately. So you don't get time to think about and reflect on why that mistake happened. You have to force yourself to take the time to reflect. And one of the things that I fortunately always did after a really big losing day as a beginner trader is I would pore over all of my data. I would look at my Excel docs, right? I would try to understand where I went wrong and how I can prevent myself from having this kind of situation happen again. Now, inevitably, I did make the same mistake more than once from time to time, and it did take months and really years for me to develop the level of self-awareness and emotional control to trade through the ups and downs that will be part of every stock market, but here I am today. So what I can tell you from my own experiences and from working with so many students is that there are a few things you can do today to help you get better at handling loss. The first thing you can do is track all of your trades in an Excel doc. Track all of those trades and categorize them by the type of trade it was, the setup, the strategy, the time of day, the price. You can actually download, my free doc. It's on Warrior Trading under free trading tools, and you can use that. It's a template. It's the same document that I use every day. By doing that, you're creating, this historical data that you can go back and look at when you're having one of those bad days. And I do this for students almost every single day. I look at these trade sheets. Sometimes they send them to me after they've had a bad day. Other times it's just part of our routine mentor sessions. And what I look for are statistics. I try to understand their data. What are they good at? What are they bad at? Where can they use improvement? Where should they focus their energy? It always helps when you have a bad day to create a game plan. And the first start of the game plan for me was always looking back at my data. And then I would say, okay, what can I do tomorrow to improve my trading? And if I had a big loss, let's say I was trading news, or let's say I was chasing a stock and I bought it way too high, I would tell myself, okay, tomorrow you need to only take trades that have a really strong 5-minute setup. No scalping the 1 minute, no chasing news. If I can't print out a screen capture of that chart and tack it to my wall and look at it tomorrow and say that was a great setup, I shouldn't take the trade to begin with. So that means that you're increasing the quality standard for every trade you take. Right? By increasing the quality standard, you're going to increase your accuracy, and you're going to reduce the number of times that you're losing. Right? It's obviously easier to deal with loss if you lose less. So by increasing your quality standard, you increase your accuracy, you have better results. That's the first thing you can do. All right. Now, the second thing you can do, and something that I would encourage every trader to do, is have a max loss. You need to know that line in the sand where when you cross it, you're done for the day. For me, my max loss is $1,000. So granted, I had a $2,600 loss on Monday. It's because by the time I was down more than $1,000, I was holding 10,000 shares. And by the time my order got filled, the loss was $2,600. But because I have that max loss, I was not able to initiate a new trade that day. So yes, I can close my positions, whether it's down 5,000 or 6,000 or 2,000. But once I'm down below 1,000 in net losses, I can't take any new trades. I did that to create that period of time for reflection, right? I actually had my broker put this on my account. So I delegate that responsibility to my broker. And I'm not going to call them when I'm really frustrated and say, hey, can you take away my max loss for the day? And that's just too embarrassing, and I wouldn't do it. So by having that on my account, I have not taken one trade since being down more than $1,000. And that's what stopped me from having a day where I go from being down 2,000 or 3,000 to being down 6,000 or 7,000 or 8,000. So it's kept the losing days smaller, right? You can do that, and that will really help you. You want to delegate some of these really hard tasks to your broker, because they want to see you succeed. They don't want to see you blow up your account and close your account, right? That's bad for their business. So if they can do something to help you be successful, they're going to do it. So start tracking your trades in an Excel doc. Only take the best quality trades, okay? Have a max loss on your account. All right, those are two things you can do today to help you, one, reduce the losses, and two, prevent the situation of having revenge trading and snowball days. And then lastly, what I encourage all of our students to do is to take notes while you're trading. If you're looking at a setup and you're thinking, I'm going to get in this, quickly write down how much you're risking. Okay, what's your stop? Because so many traders get into trades and they don't know what their risk is. You don't risk $10,000 to make 100, right? You risk 10,000 to make 20,000. But most of the time I've talked to a trader who lost $10,000, it was not because they had the potential to make 20,000. It's because they got into a trade looking for $400 or $500 profit, and they screwed up and held it and held it and held it, and next thing they're down $10,000, $20,000, whatever it might be. All right. So you always have to know what you stand to lose. Now, you will have losses as a trader. My accuracy varies between 65% and 70% at its highest. That means every single month, 30% of my trades are going to be wrong. So I've had lots of practice losing. And I can say from all of this practice and all of this experience that losing is not a big deal. It's not something to be afraid of. It's part of our job. What we have to be able to do is manage the loss. Keep the losses small, and most importantly, not allow ourselves to get emotionally ruffled from the loss to the point where it impacts our trading. So this requires a pretty high level of self-awareness. And I have it at this point. There are days where I'll be sitting here and I feel in my chest this frustration building, the blood pressure rising, and it's not always caused by trading. It can be caused by, something else going on in my life. But once it starts, I know that I'm feeling frustrated. I'm feeling aggravated. I'm more apt to make, kind of a hasty decision with a trade. And that's not when I'm on my game. In this market, we're trading against some of the best traders in the world. And some of those traders are making, millions of dollars a year. So if you're going to compete against those kind of traders, you need to always be on your A game. For me, trading 2 hours a day, I find that I really can only be on my A game, even at best, for about 2 hours. I can't hold myself to maintain discipline very well through, the entire day from 9:30 until 4 p.m. I learned that by studying my track record and studying the historical data, right? I learned this trend that I did really well in the morning and I gave back money in the afternoon. So I made the commitment to stop trading in the afternoon. I found that I had a lot of losses on breaking news. So I made a commitment to trade it less. And when I took trades on it, I traded with smaller size. You have to adapt to the market, and you have to, make adjustments to your strategy based on your results. So this is something that I'm going to, happily help you with. For all of our students that are in the Warrior Pro courses, I like to go over your trade sheets. I like to see what you're doing. I like to check in. Students that are in that class are also trading on the simulator. And that allows me to really watch what you're doing in real time. So if you're making mistakes, I can see that and I can help point you in the right direction. All right, guys. So